rotation out of tech into more value names, how is that going to affect sentiment for this market? How is that going to affect the NASDAQ, say?
Well, I think this rotation is actually very healthy for the market. And I think one of the factors that is prompting the rotation, and my own view has changed on this over the last 3 months, is I just don't think interest rates are going to go up nearly as much as everyone feared at the end of last year. You know, the 10-year popped over 3%. We were hearing 4% in 12 months. You know, there is so much slowness in the economy and low inflation that right now, you know, 2.5%, maybe it'll get to 3, maybe 3.25%. But where do you want to be? If interest rates don't go up, aren't the dividend-paying stocks, the defensive stocks, the value stocks where you want to be? And I think that's what's going on in a lot of investors' heads and why they've rotated away from the so-called high flyers to those that they were scared of, they wouldn't want to touch last year because, quote, interest rates were going up.
Yeah, but, you know, there's back to the sentiment issue. When investors see sort of those growth momentum popular names, the Amazons, the Netflix of the world moving higher, there's a lot of optimism that surrounds that. I mean, when people are, you know, going into those value plays or utilities and dividend stocks, it doesn't quite, shall we say, feel quite as good.
Doesn't cut it as, it's not as interesting a market.
But, you know, you look at last year, right? You had the market up 30%. You're looking at significant gains. You're predicting roughly 15% growth in the markets this year. Yeah. Are we really going to be able to get there when it's just dividend stocks that we're relying on?
Well, don't forget, you know, we're talking right now, we're talking about the small stock index down almost, I think it did recover a little bit today, but it was down 9.5% from its high, and people are bemoaning that. But the small stock index, these tech stocks, these so-called glamour stocks, they had outperformed the S&P last year by 10 to 15. So they're really giving that back. I mean, you're never going to get outperformance of one sector forever. Obviously, those momentum players were riding the train, and, you know, they said, I'll keep on riding this train until it falls off. And that's a lot of what you've had, I think, over there. But that is not an unhealthy development, I think, going forward. Analysts still, even with how bad the first quarter is, are expecting a 10% gain in earnings, and given low interest rates, I still think that makes this market a buy.